So we are seeing a little bit of complacency come in, but it's at the end of the day, this NASDAQ, this 7-day move in the NASDAQ, it's getting a lot of investors really kind of lulled into a very simplistic view of everything's going to be okay. I think it's a stark contrast. The next thing is an eye-opening component as we're 1% away from near all-time highs in the NASDAQ as well as the S&P 500 to really assess your portfolio and understand where risk mitigation needs to be implemented.
I've been critical of the VIX over the last year or so because the way options have changed. I don't know if it's a great reflection anymore of fear.
Fair enough.
How much do you think the VIX is getting it right or wrong now?
Well, the VIX doesn't really get it right or wrong. It just measures the amount.
I knew you were going to say that. Why did I ask?
It measures the amount option premiums people are willing to pay. So certainly we will see volatility in volatility. But right now, it seems like the fact that people are not concerned about the trade tariffs. We've talked about it. It's just a slap fight right now.
How about this? The VIX is basically near or at a 10-year low.
Yes.
Is market risk at or near a 10-year low?
No, I think it's a stark contrast, and why that is, it's a suppression in the VIX or the suppression in option premiums due to the fact central bankers are continue to be in the cycle that, yes, we are moving towards quantitative tightening, but at the end of the day, they have not really walked away from the support or that put.
Look at that chart. It's like Notre Dame football's win totals over the years. It just keeps going down.
That's not true.
Okay. Let's talk about the markets because we've got a lot of viewers and listeners out there who've probably bought some of these FANG names. You may have heard about them, by the way.
I have.
And they've made a lot of money. They're holding on, but they want to manage that risk. We've seen what's happened with Facebook. We saw what happened with Netflix.
That's right.
How can you continue to own stocks but also maybe protect yourself on the downside?
So we use a lot of option overlays to mitigate risk to downside. But if that's more of a sophisticated strategy than a lot of people want to do, a simplistic approach is to rebalance. If you have the ability to rebalance your portfolio, and what does that mean? That means that the Amazon, which is up over 60% this year, the Microsoft, all these double-digit winners, bring them back to the equal weight or the weighting they were supposed to be at the beginning of the year.
How do we do that?
Well, we are able to trim that by selling to the appropriate weight. So if you have 40 stocks, like we have Essential 40, that's a 2.5% weighting. Right now, that is bigger than it should be. So you bring that back in line, you're trimming your profits. Essentially, you're selling your winners and buying your losers. You do that now before some type of pullback, that does provide downside protection.